Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Wednesday. It is the 5th of June. A little bit more buying in the market for the most part today. Most areas finding a way to close fairly positively. Huge days for our friends in the real estate and utilities sectors. Rough day as usual, at least these days, for the energy sector. And good afternoon, Lorena. Great to see you. Welcome out, everybody. An exciting Wednesday. We've got our STEP webinar here tonight, so looking forward to that. I hope that you guys are as well. If you haven't had a chance to get registered, this is it. We've only got a few hours before we're up and running, so if you would like to get registered, just head over to tackletrading.com. Just head on over to that STEP webinar sign-up page, and hopefully we shall see you there. It should be a lot of fun and pretty educational, so looking forward to that. I think all of us are looking forward to that. On the earnings side of things, not much, big name. We do have some of the, interesting tech names like MDB, some of the mid-cap type of tech stocks. The only S&P 500 company reporting earnings before tomorrow's opening is going to be SJM Smuckers. So they're the only S&P company set to report. We saw some decent movement on a few S&P companies after their earnings. Campbell's, Salesforce, and Brown-Forman all had decent responses to their earnings reports here this morning. So not a very busy earnings stretch. And welcome out, everybody. Great to see you guys as always. I hope you had a fantastic day, both in and out of the market. Certainly a little bit, that was kind of nice to see it behave a little bit here today. At least from my perspective, it behaved a little bit here today. Taking a quick look at the heat map, you can kind of see most of our areas are in the green. Very notably, the energy sector did not get on board here today as buyers really kind of took the momentum from yesterday and were able to push through into today, but that did not carry over into the energy sector whatsoever. Little bit of selling and over in the semiconductors too, nothing crazy necessarily, but for the most part the bulls really took this one pretty handedly here today. A good afternoon, Emily. Great to see you. Pascal, Patricia, Tanner, as always, guys, I hope you're doing well. Thanks for joining me here today. Here we are on the S&P. We kind of gapped on the open, just kind of carried that momentum overnight, gapped on the open, and immediately started to pull back. And we've seen this dance a few times, right? But I think the big takeaway, and they're little things, but little things add up, right, is we worked into that 2,800 support zone, and buyers really just came right back into the market. We've not seen a ton of buyers excited to buy things lately, right? And while again, is it a stretch to say excited? Maybe, but certainly they took the opportunity and took the initiative to buy off of that 28 zone. And I think that's a good thing, both for the bulls from a mental perspective, but also for us technically. Now we can kind of use that as a little bit of a swing support level. We thought that we could because of the importance of that big round number and the activity we've seen there before, but it's always nice to confirm after a little bit of a test. So decent little day, closing at the highs of the day or very, very close to it. So as we're kind of moving forward, just another little win for the bulls here today. We also took out that trend line on the S&P or the ES contracts, whichever one you prefer to look at. Just another feather in the cap, right? So now we've recaptured the 9. We've, got that 20 starting to rise up. We're back above the 50 on the hourly time frames, showing some decent momentum. Not a lot of resistance in the short term on the intraday. I believe that there's a little more room for the bulls to run, even if all that this is a bearish retracement. Personally, as we work that into the daily chart, we're going to have layers, right? We're now, we beat the 9 yesterday. We beat the trend line here today. We confirmed, at least for one day, we're above 28. Now we have to deal with this 20-day SMA. So we're going to have layers on top of us. If we can kind of win this last fight, again, there's really not a lot until we get into that 2860 to 66 range, whether we're looking at it on an hourly time frame or on the daily time frame, as far as, at least that I can gather, potential resistance catalysts. So I don't think we want to forget the market conditions that we're in by any means, but a couple of wins back to back here for the bulls. The biggest test, I think, is going to be when we develop intraday sell signals. When those intraday traders who have had a pretty easy go, this last couple of days, because we've been in a very strong upward trend. I don't really see, according to my rules, where any intraday sell signals developed on the short-term basis. When that happens, and at some point it probably will, right? So how do they respond? I would expect the day traders will sell into that, but do the swing traders use that as an entry to start going into bearish swing trades, or is it just some intraday selling action? That's going to be the big test as we're moving forward, in my opinion, at least. And hey, Whitney, good to see you, my friend. I hope you are doing well. So for me, I'm really looking on the S&P at around 2860. That's going to put us about the hourly 200, about the 50-period moving average on the daily chart. If we're looking at just clear zones, it's really not up until around 29, or around 29, just shy of that, 2890 for some resistance. But I don't want to get too carried away. We'll take it one step at a time, I think. So over in the Dow, very similar, pushing back above the breakdown point yesterday, recapturing that 9 EMA, working right into that falling 20 SMA as well. So at this point in time, we could, make a very easy argument that this is a bearish retracement, has not yet confirmed, right? Have not seen that downward movement or anything along those lines, but we haven't recaptured our trends. And that's certainly something we have to remember as we're moving forward throughout the rest of the week. If the bulls want to take the rest of the week, that's fine. But I don't think that they're going to be able to clearly say that, yeah, we've won this fight technically, at least not today. They're taking some positive steps. Let's see what happens when the bears take a swing back, right? On the resistance side of things, really any swing, below this resistance level, which is going to line up really nicely at that 50-period moving average, will be kind of what I'm watching for. But again, we don't have a lot. We have little things, we have some intraday resistance and a gap point and things like that that could act as resistance catalysts, but there's not a lot. So until we see some shift in momentum through the intraday, I think we probably should assume that at worst, this is a little bit of a bearish retracement and is not ready to sell tomorrow. Could be ready to sell tomorrow, right? But I don't think the chart says that, at least just yet. And good afternoon, Adib and Scott. Great to see you guys. NASDAQ probably looking a little weaker, or at least a little bit further behind the S&P and the Dow Jones. In my opinion, I'm still skeptical of technology. The semiconductors in particular have not done enough to get me excited about them or to trust them. So many of those tech stocks did take out trends. And so I'm still skeptical on the technology side of things, but we were able to close back above that 7,200 here today, just another step in the right direction. I'm going to be looking at this old floor at 73 approximately as kind of that level of resistance, but these falling moving averages certainly could be that as well. For me, it's just not an area that, I think we have to always be open to both bullish and bearish trades, as you guys know. But you don't have to be open everywhere. And right now, for me at least across the board, I still am a little leery of tech at this point in time. I think there's better bullish opportunities out there. Whether that's right or wrong, I guess time will tell. But I think 73 is going to be that next level of resistance for me. We have an old floor there. We also spend a little bit time on kind of a weird looking pullback. I think that was the week I was sitting in on the halftime report that we saw that pullback, if I remember right. So we do have some history in there. If we can recapture that, maybe we can start talking a little bit. But in my mind, beyond the Russell, which I think the RUT is certainly the most likely to look like a bearish retracement today, winner, if the winner, kind of not quite as much activity. We saw nice closes, not huge days, but up near 1% on the NASDAQ, S&P, and the Dow, actually closing just a hair in the red on the rut here today. I think this looks more like a retracement or bearish retracement than, maybe the other indexes, at least here today. If I were to go, thinking about selling short an index tomorrow, it probably would be the Russell if I had to make that call right this very second. But we were able to still close above that 9. Think any bearish retracement would need to be confirmed back below today's swing low, pushing us back below that. So hopefully, if this is a bearish retracement, we get a smaller candle here, in tomorrow or into Friday, and then get our movement. We have a little ways to go, I think, before we're taking out that intraday support, failing that 9 exponential, which has hooked back to the upside right now. And that always, is something I'm going to be looking at. It can and oftentimes does act as a little bit of a support catalyst. So any downward movement, I think, needs to come below today's low. If we see that, I think we could argue that this is, it happened quick, but I think it's, if nothing else, a bearish pullback. If you have a difference in how you view retracements versus pullbacks. I know most people don't, but some people do. 1525 up here, 50, this old support, and this 20 kind of going to be that first level of resistance for me. If we kind of slow, if we see a doji there tomorrow, that might be an interesting setup if we see some downward movement on Friday at that falling 20 at that old floor. But we've got we'll have to see how we play out here tomorrow, but certainly lagging behind today, regardless of how any of us feel about it, lagging behind the other indexes today for sure. Another very decent day over in the materials sector, just continuing this nice run. We're seeing breakouts. We've looked at what many of them, right? So many of the areas, some of the mining companies are showing some strength. Not all of the chemical companies are, but APD and Lin are certainly doing nicely. We saw some failed breakouts last week as well. So continues to be a pretty decent area. We've pushed through just about everything, and we're just right back into this old range that we spent a little bit of time in back in the early and middle parts of April, recapturing basically everything. I'll be looking at this support zone. Some of these things are going to seem like they might need a pullback to my eyes or to your eyes. That doesn't mean they have to have one, though. I'll be looking at this 50-period moving average kind of to act as that first line in the sand. As this 9 rises and catches up, hopefully that can act as a support catalyst, as we've kind of talked through all week long, and probably a little bit last week too. Just feeling more comfortable when I'm looking to areas to potentially set up bull plays. This is an area that I'm feeling more and more comfortable with as the days go by. I think we're showing a lot of strength within this space. If we go in and take a peek here at this weekly chart, always a fun exercise. That's a very nice looking weekly candle. A lot of momentum. The chart may not be perfect. I don't think it is, in my opinion. And if we ever do give out of that low that we set up last week, maybe look out below, but that's a long ways away at this point. Not really a lot of resistance until we get into that 58 zone. So these things are showing a lot of strength for the most part. There certainly are some weak ones out there, but for the most part, I think this area is starting to swing just day by day almost from, I'm open on both sides, but now I'm a little more open to the bulls than the bears. But certainly, I don't think this needs to be an area where you have to look at it, I'm either a bull or a bear. I think we can still look at both sides of the coin when it comes to the material sector. But I'm liking the bullish looks better than the bearish ones personally. Flip that right upside down, and I'm liking the bearish plays a lot better than the very few bullish plays, most of which are kind of in the midstream space in the energy sector. One of, really, other than communication services, which was just kind of default, kind of barely closed, this was certainly today's biggest loser, and the only real sector to show weakness here today in its isolated daily bubble, as we kind of ran into that 9 yesterday, into that old zone at approximately 60.50 to 61, saw some downward movement. This continues to be my favorite area from a bearish perspective in the market. I continue to not be interested in any bullish activity. Most of these things are just looking terrible to me. Bearish retracement on ExxonMobil kind of looks like the market. Don't think there's that confirmation necessarily. Maybe with the exception of Chevron, they've actually shown a little more neutrality. But for every Chevron, there's a Conoco. Big breakdown off of the retracement. There's an EOG that's just hanging by a thread at a longer term support level. I'll have to turn this into a weekly chart so we can actually maybe take a look at it. But look at this long-term support level poor EOG is knocking on the door of. Maybe it'll hold. It held last time and it looked like it was certain to give out. But if that does give out, that's not bullish, right? I don't know if you think it's how bearish you think it is, but you probably don't think it's particularly on the bullish side of things if that floor gives out. So in my mind, we're still seeing a lot more weakness within the energy sector. It's not even close. And I personally am looking at it as, bearish opportunities are what I'm looking for within this area. Not open at this point, at least, to being a buyer. Another rough day for Oxy, SLB, another one that's kind of hanging right at a support zone, just kind of knocking on the door. So not a lot of reasons technically as I'm looking at these things to think that, tomorrow's the day for buyers to step back in. I've said it for a while. I can understand a bullish argument on most things, even though I don't necessarily agree with it. But on the energy sector right now, I really am not getting any bullish ideas personally. Over in financial, another decent day. Carrying on that momentum, banks starting to shape up a little bit more. The strength still remains, in my opinion, in the other industries, most notably, insurance, Aflac, Chubb have been great. We've seen, the exchanges, ICE, and even NASDAQ. NASDAQ's a little more illiquid than I would like. It's not, personally, but hard to take a look at that chart and not say, wow, that's a lot of strength, breaking basically everything here today. So we're seeing a lot of strength in the exchanges. We're seeing a lot of strength in the insurance areas. The banks are shaping up a little bit better, but they still do concern me. Before I'm kind of on board fully with the sector and back on board with the banks, I'm going to need to see that retracement potentially. I'm going to need some intraday selling to see how traders are going to treat it. Some of them have kind of worked back, but I look at a JP Morgan as I'm looking for things for a bearish retracement watch list. Well, they're right there for me. If we again today, probably not today, but a little doji, a little downward movement, follow that on Friday. Something that looks like this could be very interesting. So the banks still dicey in my mind. I don't think they've done enough to make me feel comfortable, but so many of the other areas. Of course, we've looked a lot at AJG. I always want to call him AJ Green. AJ Green, if you ever watch this, it's out of love and respect, one of my favorite football players. So, but after breaking out and then breaking out of the breakout, just taking off, Chubb, I think I was in the options report this week, knocking on the door of that first target. I believe ICE ICE did take out the first target. I think the first target was 84 with the second at, I believe it was 86. So a lot of strength in certain areas, in particular in financials, continue to look pretty strong to me, independently of what the market has or hasn't been doing. And so even on the bearish days, it's been showing quite a bit of strength. As we move into industrials, again, much like it's been for a while, for me, now that we're back above this 73, I'm feeling a lot better. We've recaptured that 9. We've recaptured the 20. We've got lots of things, right? We've got some history at 76. We know the history that we have at 77, a ton of it at 77. So an area that I think we have to be open to both sides of the coin. The waste management companies, the defense companies continue to show a lot of strength. You still have to have concerns about the Boeings of the world, in my opinion, at least, still holding the breakdown, not really done anything to show any signs of turnaround. You have Cat and John Deere that look a lot more like bearish retracements than bottoms or buying signals. But, the waste managements of the world, doing really well. Another great day for them. This has certainly been a strong area. Waste management, probably my favorite of the bunch. Just I think they have the most liquid options. But we've talked a lot about defense as well. Another great day for 3L, Lockheed, NOC, and NOC is kind of knocking right on the door of its swing high. Potential another breakout candidate. And if you look at this from a longer term, we kind of have some history in this ballpark. So a lot of strength over there, still some weakness in the Boeings and the Cats of the world. So I'll kind of still continue to kind of treat it accordingly, both sides of the coin. If I'm looking as a buyer, there's certainly defense and the waste management companies continue to be the strongest over there, in my mind at least. And certainly I think from a price perspective, they've done fantastic. Tech, probably my favorite bearish retracement area right now. I didn't find a lot of great setups, but I didn't really think I was going to, and I didn't have a ton of time to really dive through. Almost need one more day for that setup where we can see some sort of, small inside candle, some sort of intraday selling, so we can, at least start building potential bearish retracements. That is kind of how I will be overall looking at technology as we're getting into the end of the week. Personally, I just cannot get on board with buying into tech right now. Just seems like if the markets, if this is just a bearish retracement, seems like tech is probably one of the candidates that could get hit pretty hard. Now, yeah, there's going to be isolated things, Scott, like Match, that perfectly fine. Perfectly fine, kind of knocking on the door. I don't know if it hit the entry from last week or not on the actual number on the options report. But yeah, I mean, there's not really a lot. If we can continue this momentum, we don't really have any resistance until we get into around $75. So certainly we'll be okay on an individual basis, and I usually am. I'm going to look elsewhere. I guess if I see a match, or if I'm naturally following a match and I see the strength, yeah, I have no problem whatsoever trading into strength wherever it might be. But am I going to go out of my way looking for new setups? No, I'm personally not. I've been enjoying Adobe. Yeah, Shop has really ran. Yeah, they've been. So, I mean, they're out there. We've got some interesting names with earnings too in this the next couple of days, are more of the mid cap type of stocks than the S&Ps. But, I see things like this and I think, yeah, I can't buy that chart. I could potentially sell it, but I can't buy into that chart. And even, the Microsoft of the world, I mean, you could argue we've gotten back into neutrality, but we still have put in currently at least lower highs and lower lows. I don't think that's a great looking chart. Apple has got some serious work to do. Now, the credit cards, the Visas, hey, I'm open to that, the Matches, the Visas of the world. If we break out, hey, I'm not going to complain about a breakout. You guys know me. I'm never going to complain about a breakout. But many of the charts that had shown such strength are, if nothing else, showing neutrality. At this point in time, to my eyes, at least some of the bigger players. So across the board, at least collectively speaking, I continue to shy away from tech. But yeah, I wouldn't turn away a match. I wouldn't turn away a breakout on a Visa if that's what we get. I don't hate tech that much. So by any stretch of the imagination, I just feel more comfortable looking elsewhere. Such as the staple sector. Of course, we have our old friend Pepsi, who was able to break out here today. Nice little close above that resistance level, continuing to show good strength. Coke, another good solid day at the office for Coca-Cola as well, just running and running and running as it's been doing. Mondelez, MDLZ, get the right ticker symbol in there. Another good solid run off of the 50-day moving average, threatening to break resistance. Yum, another one that just continues to show really, really good strength off of a recent breakout. Campbell's, I don't know what you do with it, but Campbell's had a really good earnings report. I mean, you look at that chart, and I don't want to bet against it. I don't know that what you do with it today. Put on a watch list, I guess. But but I certainly, if someone said, "Hey, let's go bearish on Campbell's," I'd say, well, good luck. I'll cheer for you, but you're on your own. Yeah, I could take a quick peek here at Shop with Emily. Yeah, it is crazy, and some really nice movement. A good solid break here today, right? A good solid break here today. Great solid trend. So, I mean, there's always things out there. The only thing right now I will not buy personally is energy. I will not. I am not open to energy stocks from a bullish perspective personally. Anything else, if the individual chart warrants it, I'm always open to that. Personally, I'm going to focus my efforts and my searches into areas that I like the most, just like I would hope everybody else does and would assume everybody else does. But yeah, that's a nice looking chart. Oh, is SFIX another one that had earnings tonight? We're up really big after hours on an earnings report. Again, I don't know necessarily what you do with it, but very interesting nonetheless. So back to staples, pushing right back above 57. I like to see that. We weren't really terribly concerned, but it's always one of those things. I'd rather not have to think and worry about it. Just continuing to show good strength. We saw so many of those, bigger names, within this ETF hanging, showing really well. Now, on the other side of it, though, the tobacco stocks continue to look suspect at best. MO in particular, after working into that old support zone yesterday, some really good downward movement here today, kind of held support or its swing level of support for today, but that chart doesn't inspire confidence by any stretch of the imagination. Philip Morris, I think MO is a more interesting chart, but Philip Morris, you could easily make a counter argument very similar in the setup. So still seeing some weakness in the tobacco side of things, but for the most part, I think the sector continues to look very strong. Speaking of very strong, XLU, Matt, it just went crazy. We saw that action yesterday on the intraday where, early we sold off, we caught support and then spent the rest of the day, and we just pushed right through that resistance today, and boom, boom, boom. There were a ton of utility stocks hitting targets. I know I had several in my watch list, and we're hitting first targets at least. Many of them hitting new highs on individual companies. Just another strong day. If you interpret that as anything other than bullish, I'm not quite sure how, but I guess to each their own. Closing right up at the top, right knocking on the door of that previous swing high, which basically is our last level of resistance. So, maybe we need to consolidate, maybe we need to pull back a wee bit or whatever, but continues to be an area that I think you have to like as a bull. I think at the very least, you keep saying that until this swing low from last week gives out. Realistically, though, probably I'll be saying it until we break 57, although you never know for sure. 59 could potentially be our first support level. That would make sense. Pull back into 59, take another run, and then a break above that 60 area would be a really good trade setup, in my opinion. But that's a week and a half away, probably, if that's the way it wants to go. So we are a little bit of resistance, but again, these stocks continue to show a lot of strength. I don't think anybody needs me to tell them that. So over in healthcare, continued to push up as well. Certainly not a bad day in the healthcare sector. For the most part, things were hanging in there. The devices were doing pretty well. So it just continues to show, just in many ways, like the material sector, just as we're working for just more and more reasons to kind of like it than to kind of not like it. There's still going to be some bears out there, right? Until CVS has cleanly decided it's not going to break down, it'll be in my watch list. I don't know what, or if anything, I will or will not, or should not do if that ever gives out on that support level, but I will know. So there's still breakdown candidates. I think my favorite, watch list stock right now in healthcare is Lilly. Just in a nice, very organized trading range, very clean level of support right above the 200-day moving average, very clean level of resistance right above the 50-day moving average. It can be here for a while, but it could also break as, one way or the other in the not terribly distant future, K-trade style. And, I think either way is going to be a very interesting tradable signal when we ultimately break, whichever way it might be. We'll be breaking both support and the 200 if we break down. We'll be breaking both resistance and the 50 if we break up. So this is probably my favorite watch list stock in the healthcare sector, and maybe overall right now. Love when things do this personally. So healthcare continues to be an area that for the most part we could feel good about. Now there's still going to be things out there you have to be suspect on, like a Johnson and Johnson. This looks an awful lot like a bearish retracement into a kiss goodbye type of a pattern. Not interested in buying into anything that looks like that. I doubt anybody here is either. So certainly a bearish retracement candidate if I'm looking for one of those. But yeah, but so many areas, that's always the case, right? It's a stock picker's world as a general rule, and this is the type of world I like to live in. I hate when everything's doing the same thing because, well, most of the times it's easy, but then on the days it goes against you, everything goes, it's everything, right? So I prefer markets where there are interesting bull and bear setups. I don't have to just go tremendously out of my way to try to balance out my trading portfolio. And so we're definitely getting opportunities pretty much anywhere, right? Tech, which overall I'm bearish on. I mean, you look at that match, you look at that shop, you look at Visa. Yeah, I'm not on those things by any stretch of the imagination. So no matter really where you are, there's interesting setups pretty much across the board, including the discretionary sector. Continues to show a ton of weakness in the retail, and the Nordstroms and the Kohl's and the Macy's and what have you. Amazon, of course, is always a big player in this ETF, and it's not looking particularly great by any stretch of the imagination. But we, saw Starbucks. I know some of you guys probably traded into Starbucks. Where'd you go? Discretionary. And another great day, in Starbucks, just continuing that nice run off of that 50-day moving average. Home Depot kind of showing some pretty interesting signs of life, recapturing the 9, breaking above the 20, breaking above the 50, and some old resistance here today, at least showing strength. I don't know that looks like a great trade setup necessarily, but certainly looks strength, like a little strength. Mickey D's still trying. I don't know, does anyone else that's not in Utah call McDonald's Mickey D's? I just assume everybody knows that, but I guess I should ask. So still knocking on the door. That's what we call it here. At least that's what I call it, of that 200 on the break. You have things like Booking that at least holding that support, a nice little bounce off of that old support level. So again, this is a stock picker sector. I think it's going to continue to be, really so often we look at the, no matter what the market's doing, and the, the retail stocks look questionable at best, right? Sometimes they look really bad, and sometimes they look sideways, or every once in a while they're showing at least a little bit of life, but never enough to want to trade. And that's at least for me, that's how I usually look at them. That's certainly generalizing it. I'm certainly not going to turn my back on a Target or the Dollar Generals of the world. But for the most part, the retail continues to really, really struggle. And that's going to be reflected in the ETF itself. As we look at the actual ETF from a price perspective, where did you go? There you are. Working into this old range right here, we do have a little bit of history after recapturing the 9 yesterday, little upward momentum here today. I don't have a ton of faith in this because Amazon is, a big part of it, and there are components, just like there's components that look great, there's components that look like Kohl's. And that looks the opposite of great to me. So breaking down out of a little short-term base. So, I don't really love this as a vehicle right now personally, but that doesn't mean I won't, or I can't, or you won't, or can't. So I'm going to look at this 114. If we can get back above that, we're really going to recapture that 20, not really have any resistance until we get into that 116 range, where we'll have to deal with the 50. Of course, we've got a swing high that we'll have to respect it at 117 and a quarter. And of course, that big 118 range. So again, a very mixed sector, in my opinion, as we're moving forward into the rest of the week. Much like utilities, great breakout here today on the REITs, just continuing to do what it's supposed to do. Some days it might pull back a little more than you like it to, but it never breaks trend, and it continues to show strength. This is as high as we've been. We hit an all-time high over on the REIT ETF here today, continues to show just a ton of strength, as this is still a very appealing area for investors, right? Certainly continuing to hold up. The very least on the support side of things, I think we can look down at the swing low down here around that 35.90 range. As long as that's holding up, I think being a bull is the correct way, and really the only way to be looking at the REITs, at this point in time. If that gives out, maybe we'll fall back into a little bit of neutrality. That is a very nice breakout candle though today on the REITs. Both REITs and utilities up over 2% here today. Hard to complain about that. And lastly, over communication services, just not getting involved, not like the energy sector that was selling, just not really doing much. An area I think we have to be careful with. You've got the news going on with Facebook breaking down pretty ugly, maybe working into a bearish retracement off of a 200 bounce as we're moving forward. Google, of course, not looking any better. I would argue looking worse. If I had to buy one or the other, I would buy Facebook 100 times out of 100 if I had to place a bet, because at least I have a 200-day moving average working for me on a Facebook. Still seeing a lot of weakness in the big players. And as you guys know, those are big components of that ETF. Beyond that, we still have the Verizons and the AT&Ts that are kind of in these weird, very volatile, un-Verizon and AT&T like sideways E-type environments, not particularly friendly to trade. Breakdown on Comcast here, though, working into that 50-period moving average, that old floor. I think you could argue that, hey, still a breakout if we can get above that resistance. But now I think you could argue we've got a bearish retracement on our hands. On the other side of it, you've got Charter trying to break. You've got Disney trying to break as well, kind of hanging at that last, I'll just steal you, that last level of resistance. Kind of like Match, if this resistance gives out, there's really not any real resistance until we get to that swing high, right? So I could understand somebody being interested in buying, if we take that out simply from a risk to reward perspective, if nothing else, assuming they liked Disney, of course. On the other side of it, hey, we still have a pretty good breakdown if we ever pulled it back into that position. So I think as we're continuing to work through this, we treat it like we always do. I know I will treat it like I always do, a case-by-case basis. Right now, leaning to the bearish side overall, but I really rarely look at this. Well, rarely is probably a stretch. I really never look at the XLC and say that's telling me that there's a ton of strength in this whole area. My brain still can't wrap itself around what all of those things have in common. So a very interesting day in the market. We had like just over 60 S&P 500 companies hit new 52-week highs today. Yeah, that is correct. I had to do a double take myself. Over 60 S&P 500 companies hit new highs today. Only 6 or 7 hit new lows, new 52-week lows. So a lot more bullish sentiment here today than we've seen in a little bit. Now, a lot of those were utilities or REITs because, hey, we look at those charts when they're breaking out, knocking on or hitting all-time highs. That means their components are going to be doing the same, or at least many of their components, obviously not all of them. But certainly when you look at the winners versus losers today, a lot of winners, a lot of stocks hitting in the S&P hitting new 52-week highs, almost 10-1 on new highs versus new 52-week lows, at least on the S&P 500. Emily, let's see here. So what you always want to do is you kind of want to, at least in my mind, is you kind of want to use this kind of as the perspective, if you will. So you kind of, as you're going through the different sectors, I always kind of look at it like this. Okay, the material sector or the tech sector is looking like an interesting bearish play, or the the material sector is looking like an interesting bullish play. So what my next kind of step to do is, okay, well, I'm interested in that area. We'll go into materials. I'll go into kind of the default list, and all that this list really is, it's the top 10 or so holdings within each of these different ETFs. I tend to like to look at those things personally, and I'll kind of work through. If I'm looking for a new bullish play on material, since I'm, it's caught my eye from a bullish perspective, well, do I want it to be on LIN? Well, not necessarily, but I can think about what I want on LIN. And I spend a lot of time thinking about that, Emily, thinking about what I want. If this were to pull back to 188, I'd be very interested as a buyer. I'm not really interested as a buyer right now because I'm going to have a heck of a time, in my opinion, getting a risk to reward that's going to work for me. Because in my mind, and again, this is just the way that I think and the way I like to trade. I like to give things room. We basically have to put our stop loss way down here. Now, you could make a counter argument. You could say, well, let's just play into the momentum side of things, Frank, and let's kind of use today's low or something on the intraday to kind of act as our support level. And that'd be a fair argument. That's just not the way I generally like to do things. So I'll kind of walk through these things. One of the benefits, I think, of kind of having the same, handful of stocks always in your list, that you kind of, I'm not necessarily looking at every single one of these every day, but I'm looking at all of them, several times a week, just because, oh, that's interesting. Let's go take a look. And so when Echo Labs and Lin and APD were both knocking on the door of resistance, at the beginning of the week, it was very easy to naturally go in and potentially at least think about trading into the breakout side of things. So I'll kind of naturally turn to this first, Emily. So hopefully I don't have to go out of my way to look for new things. Now we're pretty extended on, the breaks on Echo Labs and on Lin, and on maybe not quite the same extent, but very close on APD. So maybe it's not something that I'm interested in, right now. So I might have to take that next step. But that's how I always like to think about things. I always try to do my best to think in advance. Hey, if this breaks resistance, I am interested. That might actually mean that order's in, Emily. So if we go back in time, you guys know how I feel about APD. It's one of my favorite stocks that I just have learned over the months that looking for opportunities to buy it tends to be profitable. And so it might be as, hey, let's get those orders in. If it ever does break that, let's just rock and roll. Or it might just be as simple as get an alert or just checking in at the end of the day. Oh, hey, there's my close. And let's, potentially set that up going into, in this case today. So that's kind of the way that I'll go. I look at it like this, Emily. It's better to be on top. And when I say on top, I mean really on top of a dozen stocks than to be all over the map on 100. It doesn't do me at least any good to follow a whole bunch of things if I look at them today, don't look at them again until Friday, and think, oh, great examples, on some of these companies that I really like in materials. If I look at these today and I didn't look at them at the beginning of the week, I'm really frustrated with myself because I know I would have bought into the breakout and made all this money, right? Whether I would have or not, I'll assume that I would have because I'm perfect in hindsight like everybody else. And so there's nothing worse than having a stock in your watch list that presents a tradable opportunity and you not making the call on it. Feeling like, well, if I didn't do anything on APT, if I just would have looked at it 3 days ago, I'd be up $7 a share right now. But I didn't, and now I'm scared that I'm late, but I'm also frustrated, so I might bully my way in. Who knows what kind of weird things I'll do. So that's kind of the approach that I'll take. And then as I'm going into tomorrow, I'll narrow that list down here tonight, Emily, into the things that I want. So we'll just use, Johnson & Johnson as an example. I'm going to want, some bullish plays. I'm going to want some bearish plays, just a couple we ran into already today, and these may not be the case, and maybe they shouldn't be the case. But if, we come into the market tomorrow morning and we're, the futures market's down or it's mixed, or as the market gets opened up, we're seeing some selling. Well, I'm already know that this is something I want to focus on. I can't look at 17 charts tomorrow at 747 more easily than anybody here, right? We have to prioritize. We have to be able to say, what am I going to focus on tomorrow morning? Otherwise, I'm going to be a giant mess, right? So I'll have this. Okay, hey, if we see some selling, Johnson & Johnson kind of a place I'm looking towards, at least as an example. But on the other side of things, we see some buying, see more strength into the market. I'm looking at Visa for a potential entry. And again, you may or may not like those stocks and just trying to use them as examples. But now tomorrow morning on that open, I'll have that priority kind of in place. So instead of looking at my 12 or 25 or 50 or 100 stock watch list, whatever it might be, I know that, hey, I can't follow all of these things. Now I can get some automated orders in, but on everything, you guys know me, I always have like 17 bullish breakout candidates that probably are weeks away from even trying to break resistance or support. I can't have all those orders in every single day. So I want to prioritize so the things that I am able to catch, I'm able to catch. I'm not worried. I look at it like this, Emily. I'm not worried about what I don't get. I'm worried about what I do get into, if that makes sense. So I hope that gives you some ideas there, Emily, kind of work from here. into kind of the watch list. If there's nothing there, but I really like materials, then I'll go scan the material sector, see if I can find something in there. Assuming I do, then I'll narrow that into my list. These are the handful of stocks I'm going to look at tomorrow on the open. And then as the day moves on and time kind of frees up a little bit, then I can kind of expand back into that bigger watch list that I have that I'm working for myself. So hopefully that gives you some ideas and at least something to think about. I'm not an organized person, as you can probably guess by talking to me by nature. So I have to have a lot of little tricks or I am all over the place. I'll do a lot, but it won't be for any particular rhyme or reason. I have to be very careful because it's very easy for me to spend a lot of time and not get anything done. And I've learned over the years I'm not the only one like that. So it makes me feel a little bit better. As we kind of move into the VIX, more downward movement here today as traders, right now they feel like the Fed's going to bail them out. Whether that's true or not, only time will tell, but that is the way that they are feeling. And as long as we're kind of holding these, intraday and potentially those hourly averages turn into daily averages, would expect, traders to continue to feel a little comfortable. But make no mistake about it, we are still in the same world that we were in 2 days ago, right? And so let's not pretend that we can't see a gap down on the open tomorrow, and let's not pretend that trade wars can scare the heck out of investors while we're all asleep getting into tomorrow's open. But a little bit of downward action here today. It's always easy. It's always easy when it's easy, right? So over in gold, what a day. I mean, we really took off, and what a rally. I mean, from our first bullish signal, which in my opinion was right here, and just kind of pushing through, working all the way into that resistance zone. And yeah, we sold off of it pretty heavily. I mean, that's a heck of a move, and I'm not going to fault anybody for 1 second for taking profits as we knocked on the door of 1350 on gold. But boy, that was a particularly great day, great movement. Now we did see, as you kind of look at this weekly chart, this is kind of the last level of resistance. So we kind of work into this 1370 zone, and then beyond that, if we can break through that zone, look at all of the upside that we have. So we still have some room to go, and that's why I don't have to feel like I'm missing out. Yeah, do I wish I bought gold yesterday? Of course I do. I'm not that crazy. But if we take out this level of resistance and all of a sudden we get to have this conversation, we don't really have a lot. We really have a big empty space, a lot of clear air, as we like to say, if we can kind of push through that resistance zone around that 1375. Now, new trading wise, a little bit tough. Probably the best thing for a new trade to happen would be either pull back, let that 9 catch up, consolidate, and then see a little bit of a break of an intraday ceiling. But anything, at this point in time, I guess any reason to get into gold is a good reason. Now, if you look at it on the intraday, that's not a particularly great looking candle, right? So after we got into that resistance zone, and it makes sense, that was a big level of resistance, right? We did see quite a bit of selling, but you can kind of see as the day went on, we actually started to build a little bit of an intraday floor already. So buyers are certainly interested right now in gold. I think we can kind of look at this 1325 as kind of that first level of support. What I really would like to see is this 9 EMA to catch up, though. That's going to make it a lot easier to try to make a new directional trade on gold, at least with the way the chart looks in my eyes. Over on silver, very similar type of price action after breaking, and we did break back above 15 briefly, right? We did not hold that by any stretch of the imagination. Much like gold, we had that big run, and then we kind of spent the rest of the day moving down. I still like gold a lot better technically than silver. We'd still need to see it close above 15. Before I'm going to get excited. Weren't able to capture those moving averages. You can look at it really one of two ways, probably depending on your bias, which is why I think kind of taking a step away from silver in my mind is the right thing right now. If you're liking silver, you can say, yeah, but we broke above the 50, we broke above the 200, we broke $15 on the intraday, and I got to give it to you. You're absolutely right. That happened. But if you're skewed to the bearish side, well, we did those things, but we failed all of them. every single one of them failed here today. And yeah, they've got an argument too. I still think if I had to do anything, I'd think this looks more like a bearish retracement than a reversal, but I wouldn't feel great about that right now, to be quite honest with you. I'm not going to be testing that theory by any stretch of the imagination, but I still much prefer gold. You can kind of see that 50 weekly moving average is kind of sitting right there. I know Coach Mark is probably looking at that thing as he's following silver. So some downward movement. I think maybe you could argue that this gives some bearish retracement, but we took out a swing high in this process, and I don't like when I see that. At the very least, I think you have to show a little bit of respect to the buying that we've seen. We've broken resistance. Yeah, we've made lower highs, but we've also made higher lows. So, trading wise, it's almost better to go sideways or pull back and let whatever's going to happen next, that next swing, happen without me, and then reevaluate from there. Still 15 at the resistance is my line in the sand. Lots of little things, and most notably the 50 and the 200, but I think you have to say that 50 weekly, at least today it won, at least today it mattered. So I think it still has some work to do for me to get excited about it. Not so much on natural gas after breaking down on Monday. Continue to just falter. At this point, much like energy, can't understand any bullish argument. That was the confirmation, as you guys know, of that break for me at this point in time. Basically, it's bearish or nothing on natural gas. That was a big break, in my opinion, the very least, as long as we're below that zone. But I think I'm looking at kind of that weekly 9 and these shorter term and this 50 period moving averages as kind of the resistance zones personally. So any little retracement, I think, would be a selling opportunity, not a buying opportunity. And lastly, over in crude, another day, another rough go, working almost all the way, and I guess depending on where you draw your line, to this old support zone. We did come off of those intraday lows, but continues to be very, very, very bearish. If we look at this on a weekly chart, I mean, there is just not a lot. This $50 mark is kind of that last line in the sand from a technical perspective. Beyond that, it's back down into those 43, 44, 45 zone before we get to our next level of support. It continues to be very bearish after breaking down. And not only did we fail the pullback, we broke down, and we broke down again at this point in time. Again, much like the energy sector, kind of bear or sidelines. Certainly can't get behind the buyers right now in any way, shape, or form. You can't, if you look at enough time frames, you can usually talk yourself into something, at least enough to entertain it, but you don't get excited about that, right? That's not a potential bull turnaround here. Lower highs and lower lows, that's just not a particularly great look. So for me, at least, continuing to look at it through just a bearish lens. On the price-wise, kind of this 50 zone support, 54 as resistance, followed by that 9/56 zone as resistance. Any pullback into upwards of $56, I'll think of that as a very good bearish retracement opportunity. We're still a ways away from that potentially happening. A break below 50, I think you could argue that as well. Working back into 54, that could work as well. So I think we did a little development, but for me, it continues to be bearish or nothing within crude oil and really energy altogether. Natural gas, the energy sector, crude oil, it's all showing a ton of weakness, and in my opinion, the weakest area, and that's been the case for a little bit now. So nothing to change my mind, at least not today. So, ladies and gentlemen, that is going to do the market recap after another interesting day in the market. Can't complain too much about. A little bit of follow through. The energy sector, still struggling, which is always good. If you're an energy bear, at least a lot of good movement elsewhere, certainly in the areas that have been showing a lot of strength, following through, closing above that 28 yesterday on the S&P, following through here today. We're not out of the woods yet, I don't think, but we're taking those little steps to maybe get us there, at least for the short term. So as we're moving into the end of the week, I think at this point in time, we really look at this as that stock pickers market. I wouldn't want to be just bullish or just bearish, either one of them going into into where we are right now in the market. I would feel terribly uncomfortable if I was just a bear or just a bull. I think in this type of a market, it's very important to have some semblance of balance. Is it okay to have a skew? Absolutely it is. There's nothing at all wrong with that, but that skew can't be I'm just a bear or just a bull. I don't think that's the way to go about it. So there's going to be opportunities on both sides. A lot of the I know as I was going through my process a little earlier, a lot of the stocks in the options or the stock report on the bullish side of things have hit or pushed through that first target, which is decision mode. And so that's always a fun decision to make, right? I'll be sure to be making it. Hopefully you guys are willing to make it. Might not be the right one. I can live with that. I just want it to be a decision. So I want to be the one making it as opposed to having it thrust upon me. So ladies and gentlemen, that'll do it for today. But as always, thank you so much for your time. Always great hanging out with you, and appreciate you joining me. If you are new around here, do, of course, be sure to subscribe to the channel, hit that notification bell. Join us over at Tackle Trading on Twitter. You can find me at FrankMartin23 on Twitter. Be sure to check out the Tackle Instagram too. A lot of cool things going on over there. I'm not an Instagram guy. I opened an Instagram account, but I don't have a single picture on it. Probably never will. But some really interesting things going on the Tackle Trading Instagram page. And so I would certainly check it out. Probably a lot of fun for you. Of course, the big thing tonight, we've got that STEP webinar. It's going to be a heck of a lot of fun, really informative. So I'm looking forward to it. You guys are going to really enjoy it. I know many of you probably already set up to get in there. If you're not, again, head on over to Tackle Trading. We've got a little bit of time left before that thing's going, but not much. Couple hours, few hours from now, that's going to be up and running. So you guys have a great time over there. If you're not a pro member, you also know the drill. You're always welcome to join us. We can get you set up with that free 15-day trial so you can come see what we're all about. So, ladies and gentlemen, thank you so much for your time. You guys get out of here. Enjoy the STEP webinar here tonight. Think you're in for a real treat. I think we'll hear good things about it. So looking forward to hearing what you guys think about it here tomorrow. And of course, those of you who watch this later, thank you so much for joining us and watching it. We certainly, it's a lot of fun hanging out live and in person, but we certainly appreciate you catching a little later in the evening as well. So thank you all so much. Thank you, Emily, Brenda, Tanner, Micah, Patricia, so many of you. So thanks a lot, guys. It is my pleasure. Get out of here. Have a fantastic Wednesday afternoon. Enjoy the STEP webinar tonight, and I will see each and every one of you here later tonight or tomorrow. Thanks, everybody. Have a great night.